So three things I want to be able to show you in this goals video. Number one is how to be able to trade without the worry of gaps in the markets. And then number two, how to be able to monitor the market, especially gold on the weekend when most brokers have closed. How do you continue to know that gold is going to go in your direction? Yeah. And then the third one is that we haven't seen a clear sell setup for the last 3 weeks. Like if you're a swing trader like the way I do, I haven't seen a clear sell setup in the last 3 or 2 weeks as of today. Today, there is a clear sell setup that is appearing on gold, and I'm going to break it down. So the first thing for you to be able to do, let's mark the market on the weekly. So we establish that this is the difference. This is the price difference from last week, because the difference between this high that was created, this one here, and then this low, which was created, the difference is in the middle there, which is this one here, because this is the candle that created the difference. So this will always be an area of resistance. So as long as price now is being resisted from going further up here, we have that chance of the market selling. And then we can clearly state it here also that the difference between this low and where price is currently was also created here. Now, this concept of price difference, I've always explained it in our YouTube. You just go to Throne, you will be able to see it. So we know now we are trading around here. But now I can just switch to any lower time frame, whether the daily or 4 hourly. I'm looking for price pattern. So let me just come to the 4 hourly chart. So the 4 hourly chart, if you look at it clearly here, you can see why the market is actually not going further up from this price difference we had marked on the weekly. But I want you to notice something from here, and that is how do you make sure you are not caught up in the fear of market gaps. So if you come to this data feed, you just come to, there are different data feeds, different brokers provide. So FXCM has different feeds from Oanda. Now, this is FXCM. What we have now is FXCM, and you cannot see the gaps with FXCM. But when you come to Oanda, you're going to see gaps. You see the gap with Oanda? Okay. So this gap can actually can bring a lot of uncertainty. Unless you're somebody who trades gap, people usually want to trade gap, thinking gaps will be filled all the time. So you can clearly tell now what I mean. So the best way for you to be able to avoid the worry of trading with gaps, you just have to switch between different broker feeds. If you're trading gold, the moment you have gold on your search symbol, you come down and you'll be able to see which brokers are offering gold, Pepperstone, FXCM, Wanda, and then you interswitch between the data feeds and you will be able to have a clear chart. So that's one. Then number two, for you to be able to monitor gold throughout the weekend, you need to come to gold USDT. So X USDT, that one there, it will tell you how gold is moving on Saturday and Sunday, because most brokers do not offer you that, because the market doesn't actually close on Saturdays and Sunday. It is the broker you're trading with that closes, and some brokers work some futures, they do provide that service. So this is how you do it. So once you have this clearly, let's now switch back to our H4 on the FXCM without the gap, and then we begin to analyze the market, because like I had said earlier on, it has been a while. For the last 2 weeks, we haven't seen a clear sell setup until today. And why do I say there is a clear sell setup? Remember, this is the area we had marked. Let me take you back to the weekly. So this is the weekly price difference we had marked. Okay. Now, if you're not familiar with this concept, like I always say, you just need to come to Throne on YouTube, and you will be able to find all these other concepts that I'm talking to you about, price difference and all of that. You can find them in our videos here. We break down the charts for you every week, like we're doing now. So now, once you have this clearly stated on the weekly, now you can come to the 4 hourly where we were, and then let me break it down for you and explain to you why I'm actually sell biased on gold. So the first thing we stated here was this is the area where the market will turn. Now, price differences can act as resistance areas, can act as support areas based on whether they are down or up. For this case here, it was up, so it was definitely a resistance. So now let's see what has happened here. So you can see a high and then a high. So what is happening in these areas there? The market is actually grabbing liquidity. You have a high here, then the market comes, forms a low, another high, another high. So you have your three touches. So this one is one of those concepts which is actually powerful about liquidity. When the market grabs liquidity for the third time, because this was the highest point the market had come, the market comes, goes slightly higher than it, comes down, goes slightly higher than it. So liquidity has been grabbed here. All the orders which were here have been taken out. So right now, market has a point of actually going to go bearish. So from here, we can now begin to mark the lows. So this is the low, the last low the market created after grabbing the liquidity here is here. So we can mark that. Okay, so that's the low. That is going to be our first target. Now, why are we interested in this sell? Because from here, you can clearly tell here, the market comes here, grabbing liquidity, giving us a higher high. Okay. Now, from this higher high, you see the market has come down all the way to form the lower low. Now, why is this a lower low? Because you can clearly tell here, this is a low, but the market has broken below this. And then from here, market tries to go back up to this higher high, and then it fails to go to this higher high, creating for us a higher low. Now, from this higher low here, you see an engulfing candle or another price difference candle. So there is a higher chance now that the market could actually head down to this lower low. And that is where we're going to capitalize on those sells. And then once this low is broken, then we can begin to look for further price patterns below this for a sell if it is broken. But if it is not broken, then we can still wait for market to be able to pull back into this area here. So if you're a swing trader, this could actually be one of those trades which you can capitalize on. Remember, gold has been ranging for all these weeks, ranging without any clear direction. So right now, there seems to be. So what you just need to do is that no matter how good the trade is, don't forget to have proper risk management. Calculate your risk. This is gold. If you risk 1% per trade, you just keep doing that. If you risk 2%, or 0.5%, you need to do that for at least a period of 10 trades. Look for the setups that are good, then tell yourself, I'm going to trade the next 10 trades with the same risk. And the moment you do that, you have a higher chance. And there is no need for you to listen to guys who tell you to go all in. These are usually guys who have introducing broker link and they benefit from you losing. Proper risk management is the only way that will make you stay in the game longer. So let's see how this sell for gold is going to play out.